It's Friday 13th of June, and as usual we're looking at November 2014 UK wheat chart. We start off with the monthly chart, bar chart which we've got in front of us, and this is going back to 2004. Right, what I'm looking at the moment is the last 5 years, well last 4 years, we're in the 5th year at the present moment. The average range of the last 4 years has been £63 a tonne. In 2010 it was 70, 11, 63, 12, 70, 50 in 13. In 2010, I've marked here the June candle. This is a monthly candle. You can see that the market shot up and we got a rise of £70 a tonne. In 2011 in June we got this big red fall here. We dropped nearly £40 a tonne, and then the market continued to go down, and it made this low here in the low of 2011, which is 140. 2012 we had a big green candle here, £20 a tonne candle, and we went up to hit the highs here of 220, the all-time high, and that was an up move. In 2013 we went straight down, minus £50. And you can see here we had a big red candle in June. So I'm trying to think of the range that we've got at the moment. If we started this year at 140. We could have gone up to high of 203 and the low 77. At the moment, my Elliott wave count, I was indicating we were going to test this below 180. That has now failed. This big May candle here, red candle, has taken that out. We've broken the lows of the year, 140. This red candle is where we are at the present moment. This coincides with the low of 2011 and the high of 2009. So it is a 5-year support line, and this is a major support. Now we've got to look for any indication of, is this going to hold? Our potential risk is it could fall down to 100 and it could go down to 77. We could get a bounce off this and we could reverse back up. The only time the reverse situation has happened is slightly here in 2011 when we had this 40 move down in June, and then we reversed up in July and August. But normally the trend sets in June and then we follow on, if you see the last 3 times this has happened. So we'll come down to the weekly chart here, and you can see I've marked this line here in the sand, 137.95, and that is where we are at the present moment. The market is just opened up, it's 9:25, and at the moment it is 138.75. So that gives you an indication we are at this level at the present moment. Now, we just come down to this is the weekly chart. We now come down to the daily chart, and you can see here this big fall that we've had in May, and we've continued the first half of June. Obviously on the daily chart we broke through the 60-day moving average, we gapped down, and we haven't stopped since. We had a small hold here at 142, which was the low of the year. That is now broken. We had a engulfing candle here at the beginning of the week, and we've gone down. To give any sign of a turnaround to come back up here and gap fill at 154, my sign is going to be a breaking of a level or a close above the 5-day moving average. The close above the 5-day moving average happened here in February, and you can see we quickly shot right back up. So this is my key over the next 2 weeks, to closely watch this to see whether we get a close above the 5-day moving average, or the 5-day moving average breaks this line and we got confirmation of we having a break. The second confirmation obviously is taking out this low here, 142, and then we're going to see a gap fill. But of the reverse of this, obviously if we break this line here during next week, continue on down, then we know where the downside targets are. So obviously that's your risk reward on the trade at the present moment. So and then just coming back down to the US wheat market, which we can see here, You can see where the problems lie. This big fall in the US wheat market from $760 down to $630. We've gap filled this here at 630, broke the 60-day on there. Volume has gone up. That's where our problem is. We've just followed that fall right straight the way down. And then just coming back, lastly we'll look at oilseed rape, and you can see here that has not broken out. That is held here at the 345 level, and we're back in the range. So obviously just a sideways market on there, so not much to say on there. So the crucial is next week is the watching the this daily chart here on the November to see where this level holds. We have got a potential, then a target here is 154 gap fill, but if this breaks, then obviously on that weekly chart you can see there isn't an awful lot of support here. There's nothing in this gap here. We could quickly drop down to £100 a tonne. So obviously crucial times at the moment, and at the moment as we're speaking, the market is still at this level at the moment, so give us no sign this morning, but I'll put an update next week and I'll keep the tweets coming as soon as I see any signal on this 5-day moving average. Thanks for watching.